All right, good evening, guys. Ken at Tortoise Capital. It is the nightly strategy podcast for Wednesday, December 16th, 2020. Thanks for your patience. All right, so before we get started, just a quick hat tip to the guys at the Barry Ritholtz Capital Management firm. They put out some good stuff. They were talking about this comparison. They were looking at Robinhood, the new broker, versus Vanguard. And so Robinhood is really geared towards the young, this new generation, and Vanguard old or family money. Robinhood has about $40 billion under management. Vanguard has about $7 trillion. 98% of the Robinhood folks say they are buy and hold, but the average Robinhood investor is trading 4 times a day. And the Vanguard folks look at themselves as long-term buy and hold, and they trade 1 to 2 times a year. The average portfolio in Robinhood is all the tech darlings and momentum stocks and the latest stories that are being flipped multiple times a day. The average Vanguard portfolio right now is holding 63% stock, 16% bonds, and 21% cash. So if you kind of look at this as an aggregate, this almost looks like the classic 60-40, but with a slight weight towards stocks right now. So it's just a difference in generational approaches. And if you look at this as some kind of continuum, with Robinhood on one end and Vanguard kind of on the other, it just makes where are you on that? Makes it kind of interesting points of comparison. So, it was the Robinhood guys that took Hertz from 50 cents and bankrupt to a short-term bump worth $5. And so everything was easy. The guys on the podcast were laughing about, saying that these guys were intraday buy and hold. Intraday buy and hold. Although they're trading 4 times a day on average. On average, 4 times. So a couple of stocks that we looked at this weekend, Boeing, DraftKings made its nice move today. We looked at Bitcoin Trust, and I added the from the same company, the same guys that manage this Greystone Bitcoin Trust also run one in Ethereum, and so I was looking at it yesterday just in time to tap into a really good trade in the currencies today, the digital cryptos. Pretty remarkable. All right, let's get to the business of the day. All right, let me look at the 30-day first. So made a new, I think it was a new all-time high here. It was so close that I'm just going to say that it was. I may be wrong, but I think it was. New 10-day high, 30-day high, all-time high. Our 10-day low down here, we're still at about 2.2%. The 30-day bumps up a little bit, but now we have I'm going to accelerate the 30-day low to here because that's where it's going to be tomorrow. So yesterday, the 30-day low was down here around call it 325. And practically it's now up here at about 347. So a lot of the froth just got blown off, and now we've got this range here is now cut in half to about 6.5%. Our RL10 bottomed out, is halfway through the dragon. It's still in the fall, but with a 10-day low right here giving it a boost, and right there ready to go. This is about 1.5 ATR to get to Z2. I want you to notice that the Z3, the Z2s, and all, the Bollinger Band mean is rising, of course. And then we've got this compression that as these prices fall off, then that Bollinger Band mean gets really tight, and now we're starting to feel this range compression creeping in. So that really makes this, to me, a critical state. Now we are in overbought conditions. And just a few days ago, when this happened, and this happened, this whole area down here, this triggered the channeling trades. And so what you get is a nice orderly move from oversold to overbought on a swing basis. And that's exactly what the typical channeling trade looks like, which is the same thing that happened over here. You get this sell-off to oversold conditions, and then you get a rebound in the routine way. So that's what's kind of setting up on long term. Our 2.5% sell-off level is down here at the Bollinger Band mean. The 5% is just slightly below the Z1. The 10% sell-off is all the way down here. It's now outside of Z3. So that's how far away this 10% sell-off would be. What would used to have been called the, a 10% correction is now either a 5% correction or a 2.5% correction. What you hear in the media is that even at a 2.5% correction, which would be about 2.5 ATRs, you would start hearing, the concern and angst about, oh, is this the end? And whereas I think the larger money managers are looking at 5% now as the sell-off, because that's been triggering the buying sprees. So the Fed has announced they're going to keep buying bonds until unemployment rate is less than 2%. So for the foreseeable future, they're just going to keep pumping liquidity into this thing, and that's part of the protection of the ownership class at all costs. Can't get a House vote on Medicare for all, or $15 minimum wage, or elimination of student debt, or unionism, but you can keep buying bonds and drive up the market. All right, so let's look at inside now the 10-day. Let's get a little bit closer and see what we got going on here. All right, so we had our 10-day high here, 10-day low there. We have visited this once before. We've got a low in the RL10 here at the bottom of the dragon. The PSAR is still intact. Tomorrow, there was the PSAR today at about 366. The PSAR tomorrow, PSAR plus 1 will be at about 366.7. So it's just creeping northward. You got your the dragon and the spine of the dragon here. The spine is right at the Z1. Between 369 at the top, which is also the low of the day today. 369, and then about 367 down here at the bottom of the dragon. Next upside target, since we already exceeded the RL10 today, the next upside target, once we break through this, if we can break through this 30-day high, 10-day high, all-time high, then it's basically 375, which is $6. So that's about I should say that's probably about 2 ATR right now, a 2 ATR move. And so if you got an upward breakout with range expansion, you could easily get that, because we are in bullish quiet conditions, which does favor the long side. So cautiously optimistic. If I've got index positions in as swing trades, I don't see how you can be lower than, I would say, the bottom of the dragon. That's about as wide a stop as I could tolerate right now, given the exceptional gains we've made on the way up, and plus the fact that this thing has sold off and is just coming back to test this high again. So there is an equally likely probability to me of a downward move. Should probably make that red. Out of this, what essentially was a doji today. And if I had to put a probability on that, I would still say, I think this is 60% and that's 40%. I don't think there's. I think the least likely move is just a sideways choppy move, because you got the RL30 rolling over, the PSAR rising, so we're in this tight consolidation range, and I think it has to break out of there. So if I were a betting man, I'd probably go 60-40, but all that really means is that there's a significant possibility for either one of those, and you got to be postured for either breakout. Okay. And let's look at the sectors. Oh boy, excuse me. It's working hard today. We got final exams, oral comprehensives today at the military college. So I was in the classroom for 8 hours, suffering through the same set of questions each time. Brutal. Okay. So the S&P was the winner today, but it was basically flat. At 0.1 up 0.16. Come on, Kenneth. The Dow was at minus 0.16. Treasuries at minus 0.27. The Russell was the weakest at 0.36. That's actually is a warning sign for me. Anytime the market is up, but the Russell is down, that's almost like a premonition of the traders are leaning more towards the sell side now. So that makes me a little concerned. All right, so let's take a look at the downside first and see what was worse. So again, we have the S&P at 0.16. So clean energy and Japan were basically flat. So clean energy still at 94.5. Japan was down a sliver. Steel was down 0.2. Materials and healthcare down 0.3. Energy down 0.5. Oil exploration down 1.34. And then everything else was just companies. So you get the underperformers today: Alcoa, Palantir. Tesla was a real scare today. We're going to see on that intraday trade. It rallied to get back to 622, but there was more weakness today than there was yesterday. And I'm going to show you on the trade where I exited 3/4 of my swing trade on that one today. Simon Property Group, that's our commercial real estate representative, minus 1.6. Boeing, minus 1.6. Cat and NVIDIA and McDonald's. So that was the end of the nice run at McDonald's, down anywhere from 1.2 to 0.5. Apple and Walmart basically flat for the day. Let's look to the upside. So the S&P up 0.16, finance basically the same at 0.17, emerging markets at 0.5, oil and technology 0.6 and 0.7, Mexico 0.8, the FANGs, Facebook, Alphabet, Apple, Amazon, Netflix, Google up 0.8, Brazil 1.3, continuing its nice run. The triple techs up 1.7 and 2% respectively. Today it was for the second day in a row, the broad sector TECL outperformed the NASDAQ 100. The other sectors that did well, silver up 3.6. That's not a sector, but Virgin Galactic up 5.5. And then the cryptos, Bitcoin up 11% and Ethereum up 20%. So both of those are trusts that trade as, I think it's exchange traded notes. So you got to buy them with limit orders, but by the holding company Grayscale. They have quite a lot of assets in there, and those are by far the two most popular cryptos. And so I'm going to show you some trades in them today. I just can't ignore the size of the moves and applying statistics to it. And I'll show you how I'm doing it. DraftKings, we framed this weekend. That was one of the symbols that came out of the Advanced Swing Traders Mastermind. And so we spent some time on the trade frame on the Saturday evening podcast from December 12th. That one was really good, by the way, that podcast. And so if you listen to that, you can see the DraftKings trade frame we put together. And then today was the day it broke out, and Matt Richardson, who offered us that trade frame, cashed a nice trade in intraday on that one today. And he's got a longer term swing trade with options on it. He's been working with Danny Ben Yair on the options strategies, and Danny's crushing it in this market. And Matt is a pro money manager, and he's beginning to adopt some of Danny's strategies. Nikola and NEO were both up strong, 3.2 and 2.7%. U.S. Steel rebounded nicely to continue its recovery at 2.5. Microsoft, Amazon, and Twitter, kind of the non-cloud gang there, playing the catch-up at 2.4. Win 1%. Devon Energy and Wheaton Precious up 0.7 and 0.8. Cliff 0.6. So let's shift. I want to shift to some trade frames of interest here. See if this is 15. Okay. Okay, here it is for this morning. So this was the Bitcoin at the moment of entry for me today. There was yesterday's close down here at 23.25, which was a good day, and closed right at the VWAP. And then today just had a massive bump up of about 10%, a 10% pop. Opened, sold off, recovered, and then the VWAP started to rise as price was going up. There was low volume on this pullback, came to the edge of the river, came to the VWAP dot, and then I got the RLXD as it crossed the VWAP and crossed the dragon. I just said, here we go, all aboard. And so my trade frame would look like this for the initial risk. And you could either be right there at the bottom of the dragon, or maybe more conservatively on a 20-cent risk at the bottom of the RL10. But that's what that trade frame looks like in the initiation of it. And then, my strategy on this for an exit would be I would keep this in play until such time as I could get a couple, maybe by this time I can, get a move in play to get to no lose plus dinner for two. I'd be watching the PSAR dot, but also if there was a nice spike in this, I might go then, and that's not unusual, I would do that. And then I would be waiting for the Bollinger Band mean to catch up. And then at that point, when this stop hit, then I would pick that up as the exit, unless I saw an opportunity somewhere in here. Just again, to after surges or spikes, I like to lock in those pieces until such time again as the Bollinger Band mean catches up and takes over, managerial responsibility, if I can say it that way. Let me find Bitcoin. All right, here's the follow through on that trade. So that's the that's that moment of entry. I chose the RL10 as the initial risk. And I was just committed to a relaxed entry on this because Ethereum was massively up. This thing was just chugging along like this. And I said, that was such a narrow range. I just said, you know what, I'm gonna take the opportunity to keep the Wu Wei trade in, and then move it up to the Bollinger Band mean, just north of the VWAP, leave that in place, and then my idea was the Z1 or the Z-1 managerial stop, because this thing was so narrowly traded that I didn't want to get prematurely bumped out. So I was just going to let that run as far as it went, and I was not going to put a second position in because I was mindful that the big pop had already happened here, and so I didn't think there would be big pops on this one. But that's what the trade looks like. And then by this time, I would be thinking about, I wouldn't be offended, I would say, if you had, move your stop right now and then until it catches up. So I like locking in those little pieces it's like after every test, and then it starts resuming. I like moving to the previous test and just sort of like locking those in. And that's what that looks like. Okay. Onward. So this is Tesla. I thought I had, yeah, here's what that looks like. So I wanted an intraday turbo position in Tesla. By this time, I had made an exit somewhere in here on my swing trade. I took off 75% of my swing trade. And so I want you to look at that. And the next slide I'm going to show you is where I took that. And then you can imagine. So I want you to imagine where you think I made that play. And then we'll talk about it. But so I took off 3/4 of the swing. So that swing got put on at an average price of around 604 and had gone as high as 640. And then, yesterday the VWAP was at 636. So I'm like plus $32 in that, which is like a plus 5%. And then today, here's the opening. It bumps up briefly, doesn't even really get back to yesterday's VWAP, and then starts the sell-off. And then the new VWAP is coming in here. So I want you to imagine where you think I made that, where I decided to cash 3/4 of the swing. Let's see. So anyway, now I've got, by this time here, I've got only 1/4 of my swing position on, but it has made an intraday low at like 621. It made a low, it rolled over, made another little low, crossed the baby dragon. Winter has now turned to summer. And then, I'm sorry, has turned to spring. Winter red has turned to spring yellow. And price has crossed the dragon. And the RL10 is getting ready to cross the dragon over here. But what I did was made my entry at that trailing PSAR dot. So that's what you've heard me talk about the trailing PSAR dot before. That's the one I mean. So that's essentially where I'm getting long, and I'm anticipating that the RL10 is going to cross the dragon, and that the PSAR, which is now here, is probably on the next turn going to flip, and it'll position like right about here, because that's where the RL10 minimum was. So that's about where the PSAR dot on the next bar is probably going to flip to. So I just go ahead and get long here. I put my execution risk down here at the base of the RL10, and so we're risking about $3 on that one. And my upside targets are, the VWAP is certainly within range, and you'll notice we're buying on the correct side of value. There's the Bollinger Band mean. I would say this initial VWAP is probably a price level. This target here, which is yesterday's close, and also the Z1, and then the fair value, and then yesterday's VWAP. So these are all places that I would not be surprised if Tesla could get to all of those intraday. That's not even hard for a stock as volatile as Tesla. Okay, so that's the trade frame. I still have 25% of the swing on, and if this turbo doesn't work, my intention would be to exit the remainder at 621, because now after this significant sell-off, it's come from 636 to 621. If this is false and breaks down, then this is where I exit the rest, because I got to lock in a gain on that last 1/4 of a swing position from 604. Okay, so that's that one. So this is the actual Tesla. This is the next leg of that, and now I'm showing you where my the exit of my swing position was right in here, and where the reason I'm out there is because this was the open. It made a move up. It sold across the VWAP, and then right here it took out the low of the day, and now feels like it's falling. You know, it's going to be one of these days. Oops, sorry. And so I'm out 3/4 of the swing position here, which felt pretty good. And then this was that where I bought the turbo intraday position back. So now I've got 1/4 of a swing plus the first position intraday. It would have to get above yesterday's VWAP for me to turn those, 1/5 of those shares into the swing trade. So I got to get back above yesterday's VWAP. So this is all tactical trading. It moves to the Bollinger Band mean, which is like the least surprising move, but then it fails, and I just get out at basically a scratch when it gives the RLXD. It comes, so now what I'm tracking is here's a low. It comes down to here. It makes a little recovery. Doesn't even get to the VWAP this time. And then winter takes over. So spring turns to winter, and it rolls over the Bollinger Band mean. I play a short here. And this is where I exit the remainder of the swing trade, and I take a turbo short and then take a 1, 2, 3 entry here. So now I don't have any swing or day position in Tesla, and it's come all the way back to 612. So it was necessary to get out for me here because I'm in from 604 and I don't like losing money, and that's the remainder. So that's what gets me out of this swing trade in Tesla. Now I'm stalking a supported spring crossing. So this is the price level here. That would be the trailing PSAR dot, right? So now as I'm thinking about, I mean, because I still like this intraday. So we are in this dot right now. So my swing, my trailing PSAR entry would be right here. And then if that happens, my stop would be down here by the belly of the RL10. So this is where the PSAR would flip to when that flips. So that would be about a $6 risk as it stands. But what would happen is that as this thing starts cruising up the stack, that PSAR dot is going to keep tracking down. So as time goes by, this entry keeps getting lower and lower and lower. And so I would expect to come into this probably around 616. If this continues to go, I'm probably going to get long around 616. I think that was it for me on Tesla though. So this one was McDonald's, and we framed that trade this weekend and had a very nice intraday trade on it yesterday. And today it broke through the Z3 pinch breakout, pulled back to the VWAP with the RL10, and then started taking off again. So yeah, price came down, touched the PSAR and the Bollinger Band mean and took off. But the RL10 never even broke through the dragon. And so that makes, for me, this is the entry at like 215, probably 35-ish. And then you can play a really tight execution risk here. To me, that's just down to the PSAR dot from the entry. And so that is about 215.20. So that's really only about 20 cents. That's about, 1%? No, it's 1/4%. So a very tight stop. And then this one rewards. I was working the Bitcoin stuff in Tesla, so I missed the opportunity to add some positions in this excursion. But by this time, I was just happy with it. And by this time, I would move because of that very nice run up, my initial risk would be here. Then the Wu Wei exit would be, you come after 3 dots above the entry, you would then go to the PSAR and then leave that in place until the Bollinger Band mean picks it up. But this one moved up so fast while the rest of the market was not really moving up, only if like the Bitcoins were and the cryptos. This thing had 2 bars where it went so fast that a natural move for me would be to just take this and go, you know what, let me take the 1 bar low here and then just leave that in place until either the PSAR picks up or the skin of the dragon or the Z1. That feels proper, like that. And then this feels, here's the lid on it. It's been running up near Z2 the whole time, and then it can't make a new high, and it starts selling off. And now the blue box represents how much I'm giving back. And because that's very close to how much I was risking, I don't want to give back more than I was even willing to risk on the front end. So I just take the exit now on that single position at the edge of the dragon and just call it a day on that trade. Later in the day, after I'm done with the Bitcoin stuff and that thing is just kind of cruising along, then I notice that on my little TC2000 thing that we got a Z3 pinch here, and so I check this out and I say, well, here is a low, here's a higher low, here's a second higher low using the bellies of the RL10, and it just broke out above the previous hump of the RL10 and breaking out a Z2. So I'll give that a try. And I put that tight stop in using the far side of the river because the PSAR dot was pretty close. And then I think this one, it returned a little bit. But by this time, now that I'm 5 bars into it, I'm going to have my stop like right about there. And then if it works, it works. If it doesn't work, no harm done. This was the Bitcoin trade. Oh yeah, I think I showed you that one already. I showed you the entry on it, and so there's the risk right here. Pick that up. I was interested in that exit. I'm not offended if you take that exit. I was hanging out a little bit longer because it was so good with that big gap, and Ethereum was so good, and there was some favorable press on Bitcoin saying this time it's different, and that right next to it was a news announcement that the Fed today committed to open-ended and continuous buying of bonds until unemployment is at 2% or less. So that's a long-term commitment. That could be a 2-year commitment to buy 150 billion in bonds every month, which is another $3 or $4 trillion. So my sense was that that Bitcoin as a digital gold, as a store of value against that kind of inflation of the currency, is not a bad play. So I'm willing to just kind of let that run. But this would have been a reasonable exit here at the Bollinger Band mean. And I think I ended up taking this one like right over in here as it collapsed. In retrospect, I should probably have taken this one here, and then probably have taken the re-entry, but I was still kind of busy with Tesla. Let's see, that's the blank. Oh yeah, so this was Ethereum, and this one was really very interesting to me. I was just studying it. It had about I want to say 15 or 16% gap up, and then I've never traded it before, but I did notice it had this. It held support here. Make that bigger so you can see. It held support higher low, higher low. Came back and held support here, held support, it collapsed. It came back and held support again. So at this point, I just decided, you know what? Let's give that a shot. And so I bought it here because now it's already coming into lunch. There's no sign of this thing collapsing. And then longer term, this just feels like continuing rising lows. And my thought process was that if I could get it now, and if it breaks above about 173, then this thing could really go. And it ended up doing that a little bit later today. So this is what it takes to get me in to a new thing like that. And so that was, let's see, 1, 2, 3. Yeah, so that was this entry here. And with a stop underneath that RL10. And then by this time, I just make that play in the usual way. And I took this. It was holding up so well, and Bitcoin was holding up so well that I kept a fifth of this as a swing trade. And it gave me a little bit of a buffer going into the close. Again, it got up to 176. And this was really in the late afternoon for me out here, and it held that price level pretty much right into the close. I think it got up to like 178 at some point. So Ethereum is now kind of on my list as the short-term core and turbo opportunity. So that's what I wanted to say about that one. So that was my adventures in trading today. I'm going to shift to the daily report now. So Joseph asked me, why did I zoom in on McDonald's? It hadn't really moved that much and it had had 2 really good days. Yeah, it had had 2 really good days after having sold off sharply. It was the worst performer in the Dow over the weekend and was in a critical state at a place where it should hold support if it was going to work. And then it had 2 very good days where it strongly outperformed everything else. And then today, the 3rd day of momentum, it started moving. So it was on my short list and I just jumped back on it. So that's just a standard continuation play. I've already invested the effort in framing the trade and developing the narrative for it. So I just go to the ones that are closest to decision. I don't have to think that hard about it. And that's the same reason lately you've seen me trading a lot of Tesla, Bitcoin, clean energy, steel, and now McDonald's is on there. So when those things are working and they're in season, I don't need much more than that to keep me fully busy. I mean, there's a lot of other things I miss, but like the other day when I missed Brazil, it's because I had a full plate. So I just trade the ones that are in season. All right, so the daily report. So we've already seen the daily. So we're bullish quiet, that favors the long side. Strongly overbought. We're at 116 on the 2-day cycle, for crying out loud. ATR percentage just reversed again. It's now under 1%. We're 14.5% above the 200-day moving average. The risk Z is now almost flat. So I'm going to keep calling for that volatility spike until it happens, and then I'll be right. But it's already back to the 0 line and getting ready to roll into the winter here. So this would be a natural place for it to have that sharp reversal. Like if it cannot get through that all-time high, and starts to reverse, could that be enough to start unwinding positions in the rest of the mob? Yeah, sure could. And if that starts unwinding, and tomorrow is Thursday, and the day after that is Friday, and then it's a weekend going into the holiday season, how much appetite for additional risk is there? Especially as we're getting close to Inauguration Day and shenanigans with Trump and the COVID getting crazy and massive snowstorm on the East Coast shutting everything down and COVID fatigue and some anaphylactic shock being reported from some of the vaccines. This is ripe for a volatility event. So that's what that indicator is telling us. No signals in channeling and overreaction. The min pain and max pain in the Dow, again, that's the usual suspects. Again, the min pains and max pain are measured as a percentage loss from the symbol's 10-day high. And I use that little quick cheat sheet to find relative strength winners and losers in order to set up short-term opportunity trades 1 or 2 days in length, exactly like I have been doing with McDonald's. Routine. All right, so the Dow tactical summary is up next. And there's just a ton of dojis out there today. And we had, we got Merck. It was a channeling and an overreaction and is at 2.6 to 1 on the auto framer. And it was the only symbol in the Dow to break down below its 10-day low. So that is the weakest stock on a 10-day basis of anything in the Dow. We have channeling and an overreaction in Verizon. We have Walmart continuing to set up with a channeling, a 5-day down, and a really low RSI2 value of 3. So Walmart is really getting compressed and is now officially oversold when the channeling signal goes on. And it's also one of the 3 5-day downs, which are Chevron, which is 3.2 to 1, and Walgreens and Walmart. So plenty of ideas right there. ETF 30. Now only 2 symbols have dojis today. That was finance and the S&P itself. Everything else was directional. And everything is so close to the 10-day high that none of them test out on the auto framer. That tells you just how close to the top they were. And then look at the symbols that made all-time highs today and breakouts. So Brazil broke out on the 10-day, the 1 month, the 3 month, and the 6 month trading range. That's what the green numbers show you. And then so did Latin America. So did the Qs, and silver broke out on 10-day and 1 month. Oil broke out on all the time frames. Tech broke out on most of them and was pushing the envelope on the 6 month. And consumer discretionary also broke out today. Yeah. In the auto framer, only 4 symbols test out well. These are all off of their 10-day high, obviously. American Express, Chevron, Merck, and Visa, but not much else to choose from on that. On the daily squeezes, a lot of them today, and that's because the daily range was so small that if it breaks out, if these symbols break out of their daily range, then and they just make an average move, then you can get some really favorable 1-day pops. And so I look at this and I see energy is appealing. SPY and Home Depot. I would add finance to that list. Oil exploration, XOP, is very liquid. There's Disney. And after its recent volatility, it's had a nice range compression. So this could be ready for the next recovery move. And then the Russell at 2-1. And then Apple, which feels kind of like a value play right now. So any one of those, if they break out, I will now go set the daily high for today as a price alert in TC2000. So if price goes through there, I'm instantly alerted and I'm ready to trade on the long side. So that's a way to conduct my preparation. That should take about 2 minutes to do that. Next up is the Four Seasons. We're dominated by the fall on both the Dow and in the ETFs. In the last chart today, the multi-time frame NDX summary in the ETFs, you just notice it's all the globals and tech had the big breakouts today. And then in the Dow, Merck, Chevron, and Verizon, big losers, but Walgreens especially getting smashed. Honeywell, I'm looking at this as an opportunity to buy quality on sale, so I'm going to go frame that trade as a value play. Yeah, and otherwise, Apple and Microsoft are really attractive to me right now. Microsoft is in the middle of a stealth move right now that's pretty nice. And you will recall, Microsoft was the other stock that we tracked this weekend and built the trade frame for. Let's see if this will cooperate. And we'll go take a look at Microsoft. Yep. So this is what we said this weekend. Go listen to the Saturday podcast and the Sunday night podcast as well. And what we said was, on the daily frame, if this breaks out of here, then we want to get long. And then if it breaks out above the larger yellow box, we want to swing trade on. So we should be long from Microsoft at around 214, maybe 214 and a half. And then today offered an opportunity to get long with a turbo trade. I didn't take it because I had my hands full, but this is what that looks like right from the opening bell. From the opening bell, it was right here. And all it did was make the low of the day at the open, and then spent the rest of the day going up from 215 and a half to 220 and a half, a 2.5% move. And you should not have lost money on that trade today. There were multiple entry points, and you'll notice that you have a Kata 2, you have a low and a higher low. There's a perfect Kata 2. There's a Z3 pinch breakout. There's another SSC entry, another SSC entry, and a Z3 pinch, and then a routine exit there. So multiple opportunities to take advantage of that trade on the symbol that we framed this weekend. And we said the key price levels to alert you to take action were those two yellow boxes. And there's the two yellow boxes. You could have even yesterday gotten your initial trade in during this move out of the daily box and made money through here, and then use that money to roll into the day trades and swing trades in here. So this was the trade frame we looked at this weekend, and that's the trade frame that followed through. The frame that followed through. So that's what I want to say about that. All right. That's everything I got. I'll get this published and posted, and